All right, crypto fam, we need to have a serious talk about Bitcoin's price because one veteran trader is seeing something that looks eerily familiar and a little scary. Peter Brandt, a legendary trader, is sounding the alarm. He's pointing out that Bitcoin's current price structure looks a lot like it did right before the big crash in 2021. He made a killer point. Fundamentals are always the most bullish at the tops and the most bearish at the bottoms. In other words, when everyone is screaming about how great things are, that's often when you should be the most careful. This whole discussion is heating up as analysts debate whether we're seeing history repeat itself, even while big institutions and even governments are getting more interested in Bitcoin. So, what's the big deal with the chart? For the past 7 months or so, Bitcoin has been stuck in a range, mostly trading between $60,000 and $105,000. This period of just moving sideways is giving major flashbacks to the distribution phase of 2020 to 2021. Remember that? Bitcoin was just bouncing between $30,000 and $65,000 for a while, and then it crashed hard in early 2022. According to Brandt, all these failed attempts to break through resistance are a classic sign that sellers are taking over. Let's do a quick rewind on the numbers. In November 2021, Bitcoin hit its all-time high of around $69,000. A year later, in November 2022, it had plummeted all the way down to $15,500. That's a massive 77.5% drop. So Brandt is asking the big what if? If a similar crash happened from our recent high of around $105,000, we could see Bitcoin's price fall all the way down to about $23,600. But what about all the good news? This is where it gets tricky. Despite all the hype around the spot ETFs and big money coming in, Bitcoin just can't seem to break and hold above that $106,000 level. This failure to continue the upward momentum is what's making technical analysts nervous. Another analyst, Michelle Van de Papa, has been pointing to that $106,000 zone as a huge wall of resistance. His charts show that the latest price jump got slammed down as soon as it tested that level, wiping out a ton of long trades in the process. So, who's right? This is the big debate. Peter Brandt's warning comes from seeing a spooky similarity to the 2021 market top. Even though the fundamentals were great back then, just like today with ETFs and institutional money, it didn't stop the massive correction. Now not everyone is convinced. A firm called ETHERX Capital responded to Brandt, saying the fundamentals are just too bullish right now to be bearish. But even they admitted that you can't completely rule out a drop. So what's the takeaway? We have a classic battle. Super strong fundamentals versus a chart that looks like a ghost from 2021. What do you guys think? Is Peter Brandt onto something? Or are the fundamentals just too strong this time around? Let me know your thoughts down in the comments.